ad. It's
All views expressed by the hosts and guests in this podcast are solely their opinions and do not reflect the opinions of their respective employers. Guests and hosts may maintain positions in the assets discussed in this podcast. This podcast is for informational purposes only, and nothing in the podcast is intended to be financial, legal, or even life advice.
GM, welcome back to another episode of More Than Speculation. And in today's episode, we have Cain from HyperDrive. Before we jump into like what HyperDrive is and who Cain is and what's the story there, let's, as usual, start with the rapid fire question. And this time around, I'm going to be asking those questions. So let's jump right into it. First of all, tech, token, or community, which one do you think is the most important?
All three. Can I say all three, or is that not allowed?
Okay.
I guess I'm a builder by heart, so I'm going to say tech.
Got it. Is TVL the North Star for a DeFi protocol?
No. I think utilization and users is probably the North Star.
Any favorite DeFi products other than what you are building, of course?
Hyperliquid.
Hyperliquid, got it. Is fundraising for DeFi? Oh, yep. Is fundraising for DeFi harder right now versus the last cycle?
Possibly. I think there's more expectations now, a better understanding of DeFi.
Got it. And something completely left curve. If I go to Australia, what's one food that I must try?
Meat pies.
Meat pies. Got it. All right. Okay. Let's jump right into it for our uninitiated listeners. What is your pitch? The short one, like what is HyperDrive?
So HyperDrive is a yield hub with lending built into its core. So what do we mean by that? It's a one-stop shop where you can lend, borrow, earn yield from liquid HLP, stake in a LST, and effectively have access to one-click yield strategies.
Got it. Let's maybe break that down a bit like further. Like what's the story behind it? Like what inspired you to like make this to me and I guess why are you thinking of designing it in such a way? Is it because of the flywheel and so on?
Yeah, so it's a good question actually. So I think if you look at where our background is, so myself and my co-founder, we came out of another protocol. We were building Anchor Protocol on Terra about 4 years ago. So we really saw that there's a clear product market fit for borrowing stablecoins. But then if you look at like lending protocols like Aave, no one really goes to Aave and borrows 5 ETH or 10,000 USDC just for no reason. You really have to know what you want to borrow those assets for. So we wanted to really build a lending protocol which sort of takes it that next step, allows users to borrow, and we actually give them reasons why they can borrow. So if you've got, one Bitcoin in your wallet and you can borrow at 5% from a market, and there's a strategy where you can enter into earning, 10 to 15%, then we want to really promote those strategies to users, one click, enter and exit into those, so you can sort of like play around with the rate arbitrage options there.
Got it. All right.
Nice.
I'll pass it to you, Lambro.
Okay, so I would like to tell everyone that I'm actually very bullish on this team. So I recently joined them as BD. So full disclosure, back bias, work bias, everything fucking bias from here. Okay, and yeah, all right. Right. Normally I will ask you what's the best actionable for this project, but I guess I know because TLDR, we're coming out of stealth soon. Maybe when this video is out, we probably be launching, and it'll be good stuff. I mean, like you can imagine the stuff that I'll be cooking will be good. If you're a project that's watching this and you want to get involved, like hit me up because I'm like the BD guy there right now. But yeah, can you walk us through some apps and strategies right now, Cain, or is it a little bit too early?
It's probably still a little bit too early, but we're going to have initially, we're focusing really around stablecoin lending markets. So we still look at stablecoin lending as the biggest product market fit in DeFi lending. If you look at utilization rates across the board, especially on Aave, across all the different markets on Aave, during bear conditions, stablecoin lending is still around 65 to 75% utilization. During bull market conditions, you're pushing north of 90%, where you can get some really good APRs on that. So if you compare that to other assets like on Aave, like the classic example of something like Link, I think you get like 0.01% on the supply side. There just really isn't a demand to borrow assets that aren't stablecoins. I think if you look back 3 or 4 years ago, the primary demand to borrow non-stablecoin assets was really to short those assets. Whereas now there's a lot better mechanism to short through all these perp platforms. You can short with much more efficiency. So that's why we're really focusing on stablecoin lending.
Nice. Would you like? Obviously, I know, right? But I gotta guide you through like kind of thing. Like, I would say like there's different type of users in this platform, right? The first one is people who just want to earn a little bit of yield on their stablecoin. That can be USDC, USDT Zero, USDE, or any other stablecoins. But why would people borrow it, right?
Yeah, so a lot of people have assets they just don't want to sell. So if we look at Hyperliquid, there's a lot of big hype holders. People really believe in hype. People really believe in things like Bitcoin and Ethereum, and they don't want to sell those assets. At the same time, you want to get more capital efficiency on those assets. Yeah, and taxes is a big one as well. Like if you sell, then you got to pay the tax. So people really want to unlock the liquidity that's sitting in these assets, and to do that, you really got to use the lending protocol. And then there's a lot of really good options for yield in DeFi, and I think one of the things that excites us the most about Hyperliquid is that there's going to be a lot more opportunities to create real yield coming out in the future. And if users can borrow at 5% and earn 15% on a strategy, then it's a really good way to grow your portfolio.
I think just very, very quickly, one like interesting, and I'm just going to throw this out there. It's not really a question, but like, is it correct to think that the natural organic buying pressure on the hype token itself, and like how it will be like integrated in the future with like HLP and so on, is that sort of like one of the natural organic yield flywheel, right, that you were like mentioning?
Yeah, absolutely. And I think that like the assistance fund on Hyperliquid buys back a lot of hype. But really, that's a side effect of them earning so much revenue from the protocol itself. So at the moment, the easiest way to transition that revenue is to go and buy back hype. But in the future, who knows what they might decide to do with that revenue.
Got it. Just so I gotta ask you this question, but like for like some of the like DeFi whales that have seen like the whole jelly situation, like what how do you like explain that, or like is there anything like on the risk side that they should be aware of as they use more like HLP?
Hey! Can I jump in here before the official CTO guy coming in? Like, my DJ take is that like it's a good thing, like bro. It's like Jeff literally just say don't fuck with my protocol. And then, like, that means it's not going to happen again. Like simple as that, right? Like, obviously, this is not me saying as a HyperDrive person, but me saying as a hype holder and a user of Hyperliquid, right? It's like, fuck you, don't come to me anymore. If you come, I'll do this again. Like, and it's good. And then, like, people are not leaving. Traders are still trading. HLP's been up only. That means it's not going to happen again. I'm actually happy it took that stand, right? Because in my point of view, decentralization is not the most important thing in crypto in terms of profit, like, right? Moto is another thing. And HLP took the stand that let's say, yeah, it's going to work. And then that's makes me very bullish on the sustainability of the yield side of things. But obviously, Cain might have a different take on this. But yeah.
I think nothing's risk-free. Everything comes with risk. But at the same time, I think whatever doesn't kill you makes you stronger. And I think, some of these things that have happened with HLP over the last, 6 to 8 weeks have actually just made the protocol even stronger. So, things like we saw after Jelly, the team implemented the ability for validators to delist an asset, and things like that. And there's some changes to the risk parameters that came out after the HLP, the issue with the ETH issue, but even before that. So I think all these things really just make it a lot stronger as a product. And we saw, obviously after Jelly, we saw the TVL in HLP drop quite substantially, but since then, it's just been picking up because people realize like it is actually a really good product.
I tend to agree with like both of you because idealism can kill you, right? And then where is the line, right? Like Solana just patched a day 0 bug, and like if they can do that, like there's nothing wrong with like Jeff saying like, hey, like this is not cool, man. One thing, just like very quickly that I want to ask. I mean, like
let me shield my protocol, bro. Can you share screen of the link that I just shared in the the tweet?
Let's see.
Okay, as the shiller of the protocol, let me tell you guys this. So we actually have 3 core products, right? The first one is we can tokenize any votes. We don't say this right now because there's more future things coming, but the focus is on the HLP votes. The reason why HRV Vault is very good is because first, it is 100% transparent proof of reserve. It's a sustainable market strategy. It's a very low volatility. Like if you just read on Twitter and don't look at numbers, right, you're gonna be like, oh, there's a drawdown, the ETH is shorting, there's insider trades, there's jelly, etc. But let me show you with like some very high, numbers that actually make sense. First, what happened on the 12th of March? There's only 0.7 loss for HLP. 1 year return is bigger than 19%. More than 70 days of the daily returns are positive. And actually, with the whole jelly thing, it's only down by like 4%-ish, if I remember correctly. And what I would like to add is that like basically Jeff say, fuck you, this is not going to happen again. So no one's going to do that the way they handled it. So that's why I think HLP is one of the few things that will bring sustainable yield source for Hyperliquid. And for the lending side, because we're focusing on there's two things, right? We want to help people to get liquid on whatever asset they hold, which can be stablecoin. And that means at the same time, we want to match people who want to earn yield on the stablecoin. There's two ways, right? First, it can be people that are holding hype that want to be liquid, or let's say BTC or ETH, etc. The other part is we can actually put your USDC at work, which is like going into HLP or other strategies that we have cooking. And also, lastly, we have an LST coming. But yeah, without shifting too much on just pure product, because it's a very rare time that Cain is willing to come on the podcast. I'm trying to make him to come on more. Let's talk more about your builder experience.
Yeah,
I
think
I will
that's
let
a pretty
Marco
good
take the wheel.
segue. No, like I was just gonna say, you're obviously like an experienced builder. I think those who have followed you on X know like your like history and so on. Why build on Hyperliquid?
Yeah, that's the really interesting thing. So we were sort of looking around where we wanted to sort of like become a permanent home like mid last year. Looking at a lot of the chains that were launching at that stage, there wasn't a lot of difference between a lot of them. They were maybe on the tech side, they were sort of looking at different things around performance. I wasn't a trader on Hyperliquid, but I had been using the HLP Vault just to earn some yield on stablecoins. And at the time when we heard about the HyperEVM launch, our initial reaction, like with myself and Matt, my co-founder, we just sort of thought, if we could tokenize HLP and allow users to borrow against that and, loop that and leverage that, then that's a compelling use case from a lending protocol. And it's something that we'd actually use ourselves. So we reached out to the team and sort of tried to understand what their vision was going forward. And the more we sort of looked into it and realized, the power that can come when an EVM can access the on-chain order books for perps and spot liquidity that Hyperliquid provides, it was really a no-brainer. Like the amount of opportunities to generate yield that can come out of that is huge. And a lot of those yield strategies, we probably don't know what they are yet. People will come up with a lot of those strategies in the future as we get more builders into the space. So as a lending protocol that really wants to focus on getting users access to yield, it was just an obvious choice for us. So we made the decision sort of mid last year, in June of last year, June, July, to sort of go all in on the HyperEVM. A little bit risky at that stage. We had a few people tell us, that's a fairly silly idea because no one knows about Hyperliquid or the HyperEVM. But it was just one of those things that, as a builder, we sort of look for what is the differentiator in a chain. What do we want to be going forward? How can we provide sustainable yield opportunities? And it was just, a really strong gut feeling that this is the place we needed to be.
Any like fundraising stories or like tips that you can share? I mean, like you have been here for like both cycles, and you're like obviously a lot of this is public info, but you're like backed by some of the notable ones. Like anything for aspiring founders.
On the fundraising side?
Yep.
Yeah, I think just really have a clear vision about what you want to build. We initially started out building a different sort of like vision with something on BNB chain, which is more going to be an Anchor Protocol V2. That didn't work out in terms of a few things there. So it's really about really identifying what you want to build. Try and not follow the crowd. Try and like drown out the noise. If you're convinced, if you got conviction in an idea, I think that the VCs can really understand when the builders have high conviction in an idea and when they can articulate what they want to build.
Got it. Lambro, do you want to ask about the thing that you've been telling me?
Okay. You told me that we were the first batch of builders. Why aren't we launched yet?
Yeah, so I think we were actually probably one of the very first protocols to deploy on the testnet. So we deployed like early July last year. So the reason we haven't deployed yet is a good question. So really, it's just more so there's not a lot to do on the HyperEVM initially, except for just points farming. So really, I think you can see that unless you have stablecoins, flourishing stablecoins on an ecosystem, DeFi doesn't really take off.
Yeah.
And when the HyperEVM launched, there was no USDC enabled. That's obviously going to be a much slower rollout. So we really decided, if we're focusing on USDC lending, we want to create yield strategies around USDC lending. So, and not just USDC lending, but stablecoin lending. So, let's just hold off until the timing's right for us. It's take the long vision approach, look at this long term, not short term, to try and get involved in the points farming, and just really, stick to our vision and our roadmap.
Got it. So, is there native USDC right now already?
No, there's no native USDC, but Athena's just launched USDE this week, and we have very good thinking process that USDT 0 is going to be launching soon. There's a lot of activity happening on chain around that. So I think those two will provide a really early unlock. There's some other CDPs on chain with Felix's FEUSD and also Hyperfire's USDXL, and there's some other ones as well that are starting to get some really good traction. There's another native fiat-backed stablecoin that's going to be launching, which is HUSD. So I think, a lot of these stablecoins are really seeing there's a really good opportunity to launch on Hyperliquid.
Got it. So if my understanding here is right, like basically you're saying that, your thesis is that stablecoin lending is the best PMF. And then right now, if you sort of like rush the launch, but there's not much stablecoin activity, then a lot of the lending borrowing activities are just going to be circular and like points farming and so on. It's not really like substantial activities, I guess.
Yeah, the activity is very limited at the moment with what you can do. There's obviously a very strong use case that a lot of people want to play around with their Hype and use the DeFi protocols. And the community in Hyperliquid is amazing. Like everyone in the community just wants to support the builders and, play around with their protocols. But really for us, it's about what we want to build is actually utility around allowing users to borrow stable coins and have access to yield opportunities. So until that's available, we're just sort of going slow.
Got it.
Just to jump in here, right? Like, because everyone knows I'm a heavy points farmer. Since I joined the protocol, I voted heavily against launching early just to get mindshare, just because I believe points are emission. By delaying our launch to rely on parts that need stablecoin and pre-compiler, it saves us like almost like 1.5 months worth of incentives if you think about that. Like, and we do not want to do anything where we just dilute users' points by mistake or on purpose, basically. So technically, we save like 2 months worth of incentives, in my opinion. I'm not sure have we covered pre-compilers yet, but like this is one of the parts where like there's a few bullet.
Yeah. Mm-hmm.
So Cain, what is pre-compiler?
Yeah, so that's really good. So this is the bit that I guess most of the builders are most excited about. The high-level view of what we call under the terminology of precompiles, and there's a few different parts to that too, but it's the ability for a smart contract running on the EVM to access the on-chain liquidity from the perp side of things. So why is that good? It just means that we have an instant unlock to a lot of different options on the L1, things like basis trades, accessing the vaults. The smart contract on the EVM can place a 10x long on Bitcoin, all this kind of stuff that just isn't available on any other chain.
Got it.
Yeah. So how is HyperDrive going to use like pre-compiler? Like obviously I'm asking myself this, but like how is HyperDrive going to use pre-compiler, and why is it better than other protocols?
Yeah, so one of the advantages that precompiles gives you is the ability to access things a lot more securely. So if we talk about our liquid staking token, which is called Hyped, if you're not going to be using precompiles on a liquid staking token, it means that when users deposit Hype into your smart contract, you need to have a permissioned account which then takes custody of all those assets.
Yeah.
So the other LSTs, they've effectively got a set of private keys that are taking custody of all that hype and then delegating on your behalf. So, that's exactly what got FTX and Alameda in trouble, right? So in the case of using precompiles, you can effectively build an LST where custody remains in complete control of the smart contract, and you don't need any permission actors to delegate on your behalf. So it's a lot more secure, and it's one of the things that we're really bullish about with the precompiles when the team launched that side of things was we wanted to be able to build these things fully on chain. We can have a fully on chain proof of reserves. Everyone can see the code. Everyone can understand the logic behind it.
Got it.
And I think that's really stick to the true ethos of what DeFi should be.
Wait, so like all of the existing LSTs then right now is using this model, like they're not using pre-compile yet, which is like somewhat, I guess, like there's like an additional risk vector there.
Yeah, absolutely. So there's no way to do it unless you really take custody out of the smart contract. And it's not an unheard of solution. Like this is what Lido do with staked ETH effectively. They sort of rely on a lot of external processes to be involved, but they also have a lot of economic costs to do that with running their own validated network to make sure the system's secure. Whereas Hyperliquid gives us the ability to do that all on chain. So we can have a real-time exchange rates as slashing events occur or as yield is generated to the liquid staking token. All of that stuff is reflected in real time. We have no requirement for any external process to update anything.
Got it.
And it's the same with tokenized HLP will run very much the same. So it's fully on chain, full on chain proof of reserves. You can see where all the assets are located at any point in time.
All right. So, I mean, you're a savvy farmer. So, like, again, I always follow your like group chat when it comes into like which farm in like Sui or like in other chains that I should be going to. What's the yield that I should expect here when it's live?
Bro, so like most LST yield will be similar. Obviously, there's some efficiency involved. In general, our LST is going to be high yield. Also, we don't take any fees, and whatever airdrop that we get, big up to Hyper Collective, that's going to give some big ones soon. That will just share it amongst you guys, and at the same time, obviously, because shilling myself again, we have a native lending and strategy involved, right? You can just expect we'll bring a lot more use case for our hyped LST, basically.
Okay, I mean, like obviously, you mentioned that the yield is going to be higher and so on. So, like, I guess my next question there is, what kind of strategies that you can actually do, and when it's live, like, I guess it's a two-pronged question. Like, what kind of strategies that you think might be available, and then how does all of that tie with like points? Is there going to be some alpha that you can leak?
Yeah, so obviously we will have a point system. It may or may not be in place by the time we launch, but it will be retroactive. I guess in terms of strategy, so we're probably going to be launching with very little on the strategy side, but the technology is already in place for that, so we will be adding those over time. Our big unlock for yield will be around HLP when that gets enabled. So we'll have the one-click ability for users to borrow against your assets and go straight into HLP yield and even add leverage to that if you want to. So that will be our first yield strategy that we're really going to promote. And then we'll have things like down the track, we'll have one-click delta neutral positions. So if there's any asset with a spot and a perps, you can borrow and enter into a delta neutral position there, along with adding the ability to use perps positions potentially as collateral in the future, and just working with other builders in the space that are building really good yield strategies.
Are you going to enable curators to come in? Or maybe that's for like future plan.
Yeah, potentially in the future. Initially, we have a risk team, an external risk team, which is managing the risk parameters. And I think that's probably how we'll start initially, just because we don't really want a proliferation of markets around long tail assets. That's not what we're promoting. We just really want to focus on, stable coins and having primary markets around stable coins. Really, we want to cover 80% of the use case and demand is going to be, users that want to borrow stable coins against Hype, Bitcoin, Ethereum, Solana, like the blue chips and the Bitcoin and Ethereum derivatives. So that's what we're going to be really focusing on. There's going to be other protocols that might be better suited to handle, the long tail assets.
Got it. I guess to like end this, is there any questions that you want to ask me or Lambro here?
What's with the get up, Lambro?
I can't believe that was
I
a
don't.
question.
I don't have titties, so this is my clickbait.
Oh my god. He's really gonna say it like that.
But yeah. Okay, last question. What do you think is required to make it in crypto?
Determination, I think, is a really big one. And you need to have a pretty strong stomach. Like, if you're going to work in an asset with an asset class that has some of the drawdowns that we can experience and some of the grifts and scams that go on, you really have to have a strong stomach and really strong belief that this is the future.
Awesome. Well, again,
100%.
thank you for sharing all of that.
I want to add on this, right? I always said, right, my money can be in highly speculative things, but my time wants to be in things that can compound and be long-term and sustainable. I think when Cain, like, because I know Cain's background and we've been chatting a lot, that's why I became bullish and joined the team, right? Cain literally meant what he said, like, as one of the anchor teammates that he went through. Then he got invested by Binance Lab to basically build BUSD, like Anchor for BUSD. He held through all the investors that believed in him and continued to build on Hyperliquid. A lot of teams could have just tapped out and just be like, "Hey, BUSD was cancelled. Let's not do this anymore." But he held through. He continued to build. I believe what he's doing. He's a very strong product person, and he's sent by his motto. And I think that's actually what's required, what's most important to make it in crypto. And that's why I'm so bullish and joined them.
Never give up. Yeah, that's it. Multiple cycles.
Yeah.
Well, thank you.
I think you have to have a really strong belief in, what it is we're building here. So, like, I think we really see the next evolution of DeFi to be fintech on blockchain rails. Just an easier way to build fintech applications and service those to, everyone around the world.
100%. All right, that's a wrap.
Thanks, Cain. Cheers.